Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimezie Obi Iwagu. On the program today, Nigeria's manufacturing index surges to 58.9 reading in April from 52.8 in March. South African probe finds oil reserves sold at the end of 2015 was a straight sale and not part of stock rotation as previously stated. Plus, Libya's oil production rises above 760,000 barrels per day, its highest level since December 2014. Let's get started, and we're starting off here in Nigeria, where the Manufacturing Purchasing Managers Index shows a surge to 58.9 reading in April from 52.8 in March. Data released by research firm FBN Quest today shows all 5 sub-indices picked up in April and all were in positive territory. The analysts attribute the uptick to an improvement in supplies of raw materials as well as in demand, led by large companies with more than 200 employees. FBN Quest also highlights the effect of the central bank sales of FX to retailers and to importers, which has led to the appreciation of the naira on the parallel market. The analysts forecast a positive GDP growth of 0.2% in the first quarter of 2017. And to the markets now here in Africa. The markets were all looking green at intraday on the first trading day of the week after the Labor Day holiday. In South Africa, the Financial Services Board is probing certain trades made in the hours before former Finance Minister Pravin Gordhan was recalled from an investor roadshow and then dismissed. The JSE index was up 0.25%. Here in Nigeria, the All-Share index was trading high at 0.63% as at noon, and that's as investors continue to digest first quarter earnings. Egypt outperformed with a 0.99% rise at intraday. The market in Kenya is also open today. However, it closed positive 0.03% on Friday. In the Middle East, most equities were sluggish as oil prices traded near 5-week lows. The Saudi stock index edged up by 0.03%, but Emma, the economic city, jumped by 4% in active trade ahead of a Saudi television interview with Deputy Crown Prince Mohammed bin Salman that television executives said would be broadcast later in the day. Prince Mohammed is expected to discuss government plans to expand housing and industrial projects in the kingdom as part of economic reforms that could benefit EEC, which is developing a huge industrial zone including residential space. In Abu Dhabi, however, blue chips weighed on the index, which fell 0.20%. Telecoms operator Etisalat was down 0.3%, and Abu Dhabi Islamic Bank dropped by 1.1%. Elsewhere, Dubai index fell 0.21%. Commodities-related shares were the main drag on the Qatar index, which was down by 0.94%. Petrochemicals maker Industries Qatar fell 1.2%, and oil shaper Qatar Gas Transport lost 1.4%. In Europe, the markets opened today after the Labor Day holiday, with investors reacting to fresh earnings and awaiting the upcoming French presidential vote. For details on today's market, let's bring in Janelle Dumalon, my colleague at the Frankfurt Stock Exchange. Good afternoon, Janelle. Thank you very much for joining us, and welcome back from your long weekend holiday. Now, the two political rivals in France's presidential race exchanged criticisms at the start of the final week of campaigning on Monday at the Labor Day rally. Are the markets and investors taking their differences seriously, or with a pinch of salt as the trading day kicks off?
Well, the differences are very real, and that's certainly not lost on the investors here. In Emmanuel Macron, you have the pro-European candidate, and it has to be said, he was stuck with this label of the continuity candidate, but not entirely unjustified. He was, of course, already a finance minister in Francois Hollande's cabinet before leaving to start his own En Marche party. And, of course, in Marine Le Pen, you have the right-wing populist. You have a right-wing populist, and Macron's policies are geared towards, for example, reforming the pension program, a 50 billion euro investment in public spending, and cutting corporation tax. Now, what investors are asking themselves here are how much, what he would use to finance these measures. So that's an open question among many of those that I've talked to here. And in Le Pen, you have the impending end of the euro and obviously the end of the European project, even if she gets elected. Now, the markets reacted very positively to the news when it emerged after the first round that Macron and Le Pen would go head-to-head in the second round. This time, however, markets are reacting with relative confidence that it will be Macron who will end up leading the French, and there is a pretty comfortable lead between him and Le Pen now of 15 to 20 percentage points. And if Macron wins, we could be seeing a rally in French stocks, in government bonds, and in the euro.
Well, let's look at some of the economic data coming in. Today is the PMI day, and the Eurozone PMI is on the street. What do the numbers reveal about Europe's largest economies, even as the UK reading surges?
Exactly. Now, the Eurozone factory sector recorded its fastest growth in 6 years last month, and recovery, therefore, seems to be gaining momentum. That's the clearest picture we have of those numbers. And Germany showed especially strong results. Remember that results above 50 points are especially strong. And in Germany for April, it was 58.2. France's manufacturing sector also showed some similar gains, going to 55.1 in April from 53.3 in March. So the straggler here this time around was, of course, Greece, because of its austerity policies, because of falling exports. Those things are continuing to hobble the economy. But the overall picture that we're getting here is that the certain set of factors, including a weak euro, record low interest rates, policies from the European Central Bank, and an uptick in domestic demand. Now, they are indicating that people in the Eurozone are very confident, and that's despite upcoming uncertainty like the Brexit or like the upcoming French and German elections.
Well, let's look at what's happening in the U.S. How concerned are European banks regarding U.S. President Trump's comment about breaking up big banks?
Well, just looking at European banking stocks today, they don't seem all that concerned. You have, for example, Germany's two biggest banks, Commerzbank and Deutsche Bank, and they're both trading slightly higher. And of course, it's hard for the banking sector to truly digest what this pronouncement means. With a lot of things related to Trump, you just don't know how much weight to assign it or whether he will again change his mind. Now, but there are pro and contrary arguments to whether to do this or not. Now, one argument could be that breaking up the big banks would allow smaller players in, and while large Wall Street firms are more valuable in separate entities as altogether. On the other hand, if banks are made to go through a certain transition period, that could make them more conservative about lending. So, but again, there has been little reaction from the European banking sector as they sort of review still what this could mean for them. They just don't know at the moment.
All right, thank you very much for your time. Janelle, do enjoy the rest of the day.